the more you understand the process of trading, all right, the more you become psychologically aware of what is right and what is wrong. And once you are psychologically aware of what is right, and you're able to differentiate it from what is wrong, you will see that your trading begins to make sense. Let me tell you something. I don't know if anybody has noticed this. How do you know that you are mastering the process truly? How do you know that you have become a master of the game? How you know is simple. The more you try to analyze, the less you get opportunity. Right? You're not going to get opportunity to trade. You now begin to discover that in a whole week, you are only getting 2 opportunities. Only 2. Only 3. Only 3. 3 opportunities in a whole week.
Stop, man.
Who is noisy?
Stop, man. Stop, man.
Don't worry, I will mute the person. All right. So you understand what I'm saying? How do you know that you are following the process? You will discover that you are not getting opportunity. All right? Correct grade A setup. Only 2 or 3 in a whole week. It's okay for you. Do you understand? Even as market is, I will get 2 trades. 2. If I get 3, I will really thank God. Because even when a market hits its level, there's a particular requirement I'm looking for me to be able to trade the buy or the sell. And if that one does not occur, despite the fact that it has hit the level at the right time, I will not still take it. So this will help you to limit your losses. Do you understand? And improve your psychology. So if you want to improve your psychology, if you want to reduce over trading, it is to follow the process as it is and then have a particular pattern that you trade. You have a particular pattern that you trade. You have a particular requirement for entry that you follow. And if that one does not exist, you are not trading. It's as simple as that. There is no better way to improve your psychology than that. That is why when I want to do weekly outlook, I will use example of weekly 4 hours and 15 minutes. You know, I used to teach that there is top-down analysis, there is also bottom-up approach to analysis. When market is trending well and market is very liquid, it is much more easier for you to do a bottom-up approach. You can even go to 15 minutes time frame. You see setup and you trade, and your trading will make sense. But if market is not liquid enough, you cannot do a bottom-up approach with success. In that case, you have to do a top-down analysis. That is why you guys will discover that for the past like 6 months, 7 months, 8 months now, I've never looked at market from 15 minutes to higher time frame. I've always been looking for market from higher time frame down to lower time frame. Why? Why the need for the change? Why the need for that dynamism we bring to the market? Because market conditions change too. Conditions are changing. So when conditions are changing, you need to have vast amount of knowledge to know how to change with the condition of the market. So if Donald Trump stops the war, market becomes liquid, uncertainties are removed, and liquidity returns to the market, I can begin to look at market from 15 minutes time frame and above. I will just confirm with higher time frame and take my trade because there's liquidity in the game. Do you understand now? So why did I have to reintroduce Elliott wave theory and then modify it with the knowledge you have before to introduce NTFX wave analysis? Because market conditions have changed. And the only known method to me that can precisely forecast the market is wave analysis. That is why I did not listen to anybody and went back to it and said the only way I can lead this community right, the only way I can come to this community and speak with authority is if I reintroduce wave analysis so that I can tell them this one will go up and you see it is up. I can tell you then this one will come down and it will come down. Because market conditions have changed, that is the only known methodology that can predict market direction accurately. That was why I introduced it. And then from different calls I received from people outside my community to please reintroduce wave analysis to do forecast for them. That's why when I introduced it and I took it directly to YouTube so that many people can benefit from whatever forecast that we make. And you can agree with me that the forecasts have been inch perfect most of the time because it's a theory. Okay, but essentially what I want to discuss with you this evening is that in a condition where market becomes illiquid, it does not mean that you stay away from the market and not trade. You don't do that. What you will do instead is to have a particular structure that you trade. Have a particular entry that you trade. It is not possible that from Monday to Friday, you are not going to get 2 or 3 of this structure, and you are not going to get 2 or 3 of your entry system that you follow. And this system, these structures are structures that you know and you understand. All right? And the entry are those that you know and understand. But the problem is that people cannot just pinpoint what they want. You must determine this is what you want. And it is only when you get it that you trade. When you don't get it, you don't trade. That is why I am confident to tell you that I've had some weeks that I only made one single trade. One. Some, 2. I'll be very lucky and grateful to God if I see 3. Where is it coming from? The 4 hours might come to its level, but the entry that I'm looking for in 15 minutes will not come. Okay? This will take me to the chart. I've been analyzing BTC for you, and I've been telling you that on the weekly time frame, BTC has to make a pullback. It has to make a pullback here and drop. You need to drop more. All right? It can't go up from here. Why? Look at here. Trace here to this level. Which liquidity has this level taken? It has not taken liquidity on the weekly time frame. So where is it going to get the volume to go up? So I can tell you that this BTC will not push up from this level. That is why it's slow and sluggish. When it was here, which liquidity did it take? Trace it here. No liquidity. So I was confident to tell you it was going to drop. Did it not drop? It dropped. Now it has not taken any liquidity. You need to push up and drop. By the time it dropped, it has taken liquidity. From here, it's easy to start going up. This is what you do on the weekly time frame. This is exactly what you do. Once you get that, okay, you want it to push up, what is it doing? On 4 hours time frame, look at the structure. If you like, you use daily. If you like, you use 4 hours. All right? But sometimes I use 4 hours. Look at it. Look at it. Look at it. 1, 2, and 3. 3 wave up. 1, 2, and 3. This 3 wave down has what? Has broken this low. What does it mean? I have taught you this. Whenever you have A, corrective structure A, and corrective structure B has broken the level of A, what does it tell you? It tells you that there is possibility of formation of expanding flat or a running flat. If it breaks it, then from here, this is my second grade A setup. I'm going to be looking for buy opportunity from here to the upside to break this top. So it's either going to go like this and come down, or go like this and come down. If you get to this level and come down, this becomes a running flat. If you pass that level and go up, it becomes expanding flat. So I was looking for buy from here to what? To target this top. Are you seeing the logic now? So that was why from this level, I was saying look for buy opportunity from BTC. And we have been buying. So look at it. Buy opportunity here. This is what? There's no buy opportunity here. Why? This is just a pullback up. What do you see here? Three-wave structure. So from this level, there's what? There's buy opportunity. Boom. I will now show you how it meets up with entry. From here, buy opportunity here. All right. So right here, buy opportunity again from here. Buy opportunity again from here. Okay. Now, you see it? You can see I'm having the push, I'm having the corrective structure. I'm having the push, I'm having the corrective structure. I'm having the push again. So now, let's go to remember, we are confident to start looking for buy here. Why? Because we are projecting that BTC should take this high. Okay? So now, let's go to 15 minutes time frame and now see how you should validate those levels with your entry. How should you validate them with the entry? You see the one I took and you see the one I couldn't take. Okay? Now look at this one. We are here. Now listen to me very well. When you want to take your entry and maybe 4 hours has gotten to your level, after you have seen the push, you have seen the corrective structure, you know that you have to be waiting for what? Entry. Now, in every entry, especially when market has become nonsense, as Donald Trump has done it, every entry you take, there must be certain element that must be present. You must ensure that at the point you want to enter, there's build-up of liquidity. Let the liquidity be cleared, injection, pullback, or corrective structure before you buy. This is very important. If you don't see this, don't even bother, because what you are doing might go against you. Even though it seems as if you are doing what is right, it will go against you. You understand? So what I'm telling you is that you know this, but you don't know that is one of the is I would say is the highest probability entry method you can use. Why? Because you have initially taken liquidity out of the system. And the essence of this liquidity you are taking out is to define your invalidation area. This clearly defines that once you have this push up, this corrective structure can never break this area. So if theoretically you can never break that level, what does it tell you? It means that your stop loss here is safe, especially when you are getting this pattern in a high volume session. In a high volume session. What I'm telling you is a system that will not make market to fool you. What I'm telling you is a system that teaches you patience. So if you already know that this is your entry methodology you want to adopt, if you see anything that is different from what you are seeing, you know that you don't have a trade. So which psychological teaching is more than this? So that is why I keep telling my friends and all of you that the best method of emotional control and psychological advancement in trading is to understand the process you want to trade, understand the pattern you want to trade, and stick to it. Just stick to that pattern. Don't bother about any other thing. All right? Now, you will see a build-up of liquidity. And once you see a build-up, you will see market will strike it, bam. Once you strike it, bam, and move up, bam, you know that, yes, you are looking for corrective structure to enter. Look at it here. Look at what we are saying here. You see what we are saying. Okay? This is a liquidity. Liquidity must not be 2 legs, 3 legs. That is a wrong teaching. Liquidity can build up on a single leg. it can build up on a double leg. It can build up on a triple leg and multiple legs. I have seen people who trade smart money concept who tell you that liquidity can only build up when you have double bottom or double top. It can build up on a single leg. Like in the case of this one, it's building up on a single leg. Look at it. And what happened? New York overlap came. What do you see? Boom. You take it. And immediately you take it, what will follow is a strong move. What will follow is a strong move. Can you see? Strong move. Okay? After the strong move, we are expecting a corrective structure. Can you see? 1, 2, 3. 1, 2, 3. And boom. This C must break the level of A here. So you have A, you have B, you have C. This is your entry. This market develop and give entry in what? In Tokyo session, 3 a.m. 3 a.m. GMT plus 1. That is Tokyo. Boom. That is your trade. Stop loss below the impulse and then extend it based on 4 hours structure. This is an entry model. Look at another entry in what do you call it? In another time frame. Single leg. 4 hours has told us that from this level, you need to go up. Look at it. Boom. Boom. You take it. Have you not taken liquidity? You have taken it. This is an import. Strong move. Is this a corrective structure? This moving down. Is it a corrective structure? Is it a corrective structure? Somebody answer me. Is that a corrective structure?
No, sir.
No. So you know
No.
that even though you have taken a single leg liquidity here and you have had a perfect injection within the time frame of a high volume session, which is an overlap, when Canadians are starting market, when Americans are starting market, you have impulse, but do you have a corrective structure? No. This is not a corrective structure. This has taken another liquidity. Maybe because the liquidity that is available under this low is not enough to push this market to the upside. That is why it has to come back to come and take another liquidity. You can see that we cannot enter buy here because this is a pullback and not a corrective structure. All these details, I cannot give them on YouTube. I can't give them. I can't give them, but I can give you. Do you understand? Now, this has taken a single leg liquidity here. After that, what do you see? This is an injection. Sometimes I tell you, allow you to break structure, but I have modified it. I have modified it. It doesn't have to break structure. Why? Sometimes before it will break structure, your entry is over, it's gone. So, and I've discovered that even though it doesn't break structure, when corrective structure follow the strong move, you can take your trade. Look at this. You have a liquidity sweep here. You have swept liquidity. You have had what? Injection. But do you have a corrective structure? No. You rather had a pullback. So you are not going to consider any entry from here, which means you have another liquidity taken. You have another injection. What do you see here? Impulse, corrective structure, another impulse. This is something like this. Impulse here, corrective structure is A, 1, 2, and 3. That is with B, and then this with C. This is your entry. And it's even coming to 75 to 90. This was a perfect entry for me. I had to lose sleep for me to get this entry. Sometimes BTC will develop structure, everything in overlap and give you entry in Tokyo. There's no time you cannot trade BTC. There's no time you cannot give you a setup. Can you see? You now project it on what? On 4 hours time frame. This was the trade I caught. Let's look at this one. It's a perfect one, guys. This is a perfect one. Look at it. Liquidity build up. Liquidity build up. Can you see? Boom. Do you see the way it took it out? You had the impulse. You go to lower time frame, you see that this is a perfect corrective structure. And then within the what? Within the framework of overlap. Boom. Your entry here, your stop loss here, boom. This was the last trade of the week. Unfortunately, we got to this level and market closed. I had to close my trade, but not until I got, I think 1 to 5, around 1 to 5 or so. If I adjusted my stop loss here, I got 1 to 5 on this trade. And then market opened again. Remember, we said here that we needed to go up to come and break this top. So any corrective structure on 4 hours time frame is my trade. If I have a push, I have a corrective structure, I look for my entry. I have this push, I have this corrective structure here. All right. I have my corrective structure here. Boom. So I need my entry. Look at it. I need my entry. Look at it. You see it? Boom, boom, boom. What do you see? Build up of liquidity. What do you see? Taking it out. What do you see? The push up. What do you see? A three-way corrective structure, A, B, and C. Right here is my trade. This is the last trade I'm taking on BTC. Thanks. Thanks. So the worst that can happen is for it to come back to your entry and take you out at breaking. But that you lost it. You lost it is a joke. But that you lost it is a joke taken too far. So this is what you do, that when market conditions are not perfect, you will see a perfect structure. And after you have seen a perfect structure, when the structure gets to its level, you wait to see a perfect entry, an entry that reflects the presence of liquidity, an entry that reflects the readiness of the market to pick up. So any day you do not see this liquidity grab, taking, injection, corrective structure, if you see an impulse after the impulse, if you see impulse, do not consider. What do I mean? If you see something like this, okay, you see something like this, this is liquidity grab, this is impulse and impulse. This trade is not for you. You need to see impulse followed by corrective structure. But if you see impulse and impulse, it is not for you, because after this impulse, you see a corrective structure more downside. And what does it mean? You have, if this more downside has taken this level, it has invalidated the characteristics of an impulse. An impulse must not be invalidated by correction. Correction must not take the level of an impulse. If correction takes the level of an impulse, that impulse is no longer an impulse. It is a part of the overall corrective structure. This is the nitty-gritty that you must understand as far as wave analysis is concerned. So this is no longer an impulse for a buy, but this has become A, this has become B. You now need this to now go like this, C, and now sell to the downside. Can you now see now how it is done? I'm showing you this in details. That is how it is done. Do you understand now? So that is how you handle it. The worst that can happen is for you to get what? A break even. Okay? Look at another one here. All right? I have just a few minutes, maybe 10 minutes to go. Look at another one here. Look at it. Structure. Structure. From here, I've been telling you, look for upside. For what? For gold. And right here, we're looking at this as what? A corrective structure for downside. Okay? And if this downside, three wave here, which is A, which is B, which is C. If it has taken this low, what happened? This is invalidated as an impulse, which means it's a part of the overall corrective structure. The pattern, the structure has changed. This become A, this become B if you break this low. B, and then we must have C here. To either break this top and become expanding flat, or come here without breaking this top and become a running flat or downside. This is simple techniques. Simple techniques. So when you understand this technique, you are happy that you want to trade the market, because you're going to understand market direction. Do you understand? So now, having understood this, that we are here, what do I see? Look at impulse here. Look at corrective structure, A, B, and C. Why am I calling this sharp one as B? If A is sharp, B is sharp, C is sharp, they are qualified as a three-wave structure. You have this impulse. If you have A, B, and C, the three are sharp, it is qualified as a corrective structure. This is what you will not see in Elliott wave theory. He doesn't believe that B is supposed to be sharp. But we are saying that in as much as A is sharp, B is sharp, C is sharp, is qualified as a corrective structure. But if B is sharp, A is sharp and C is corrective. No, it does not qualify. It means that this become A, this become A, this become B, and C must come here to complete this structure, and you have this as what? Overall A, overall B, overall C. Oh, is somebody confused? Is somebody confused? Sorry, all right, you shouldn't be confused. When you get to the course, you understand what I'm trying to do. So what am I saying now? From this level here, can you see that this corrective structure has taken the level of A here? What does it mean? This has become a part of corrective structure. A, B, you need C for what? For gold to drop again. This is the clue. This is what it's telling us. Because this is not an impulse to continue to go to the upside. If it is an impulse to continue to go to the upside, this C must not break this level. So if I want to go up, I must look for what? An empty pattern right here. How do I get the empty pattern? I must see what? I must see what? The market build up, take liquidity. So when it came here, build up, can you see? Multiple. I've showed you simple. I've showed you one level liquidity clearance, second level liquidity clearance. This is a multiple or three levels liquidity clearance. Can you see? Clear it, boom. Once you clear it, injection come, boom. I told you, if you watch my weekly outlook, I gave you this as a trade. Where was the market that time? The market was right here. And then when market open, I told you this will be a corrective structure here, okay? Because there's already liquidity graph. From here, look for upside. Before even anything happened, before you see Jack Robinson, you have already made money. And those that watch the video, the weekly outlook, they will have made money here. All right? You will have made money here. So this is how it is. How do we know, even before market open, that gold will make a move from here to the upside? Why? Because on 4 hours time frame, we have already taken this liquidity. And then at the point we're supposed to enter, we have this liquidity build up, liquidity clearance, injection, corrective structure, perfect trade to the upside. And where is the target? We expect gold to break this top. Okay? We expect gold to break this top. Whatever is going to do for you today, whatever is going to do for you, we expect that even if you see corrective structure and you come down to take this low, from here, we should see a build up on 15 minutes, take it, okay, push up, corrective structure, you enter again to break this top. It's as simple as that. So you master the structure and then master the entry. Master the structure, master the entry, and then you will break free of trying to enter a market that is not good for you. You are going to have to learn how to abandon the market that is not good for you. This is what I do, that in a whole week, I do not see more than one opportunity. In a whole week, I do not see more than 2 or 3. And it is enough for me. It gives me free time. It gives me enough time to do whatever I want to do. All right? I don't have to face the market. Once I come to the market in the morning and I do not see structure in H4 or daily that reflect my weekly direction, I know that I have no trade that day. I don't even bother to come back. I don't bother. But when I see the structure on 4 hours or daily that reflects my direction, I've seen the impulse, the push, I've seen the corrective structure that must be minimum of 3 weeks. Once I see it, I'm waiting patiently for overlap to come for me to see how liquidity is built up and cleared. That gives me a signal that something good will happen. And after the liquidity build-up is cleared, and you have injection follow, and you have a corrective structure after this injection, corrective structure, not an impulse. Do not trade on impulse. Trade on impulse and corrective structure. Once it happens like that, and you enter, you will get something. Any question? We have 3 minutes. Just 1 or 2 questions. Then I'll show you what I want to show you, and I expect you to resume trading, not to overtrade. If you don't see these 2 things, I always told you before, go and have your own structure you trade, have your own pattern. But I'm begging you in the name of God, copy my own. Copy my own. Copy my own. Copy my own. Copy my own, because it's the closest to reality. It's the closest to achieving 90 to 95% accuracy. I've checked all others that I've developed, but these two I've selected, they are closer to 95% probability of success. So in my trade now, the worst that can happen to it is breaking, not a loss. It's a breaking because it must go in my direction because of what I've said. Okay? So copy my own, copy me. I'm begging you, copy me for now. If you copy me and you don't see success, after 1 month, 2 months, then you can leave my own pattern. You can go and look for your own pattern, your own structure, and your own entry stuff. But for now, just copy me. And you will see that you will be dodging market that is not good. Market that is flu. You will be dodging it. You will not be part of it. You will only be part of the one that is good because what you see that make you to enter that trade is the reality of what is happening that time. And you are following that reality. Do you understand? Because for every market that is ready to move, liquidity must be present. And after liquidity, there must be trend. That's what I taught you. After liquidity, there must be efficiency. Efficiency is what brings trend. Is what makes the market to become stable that nobody can be cheated again. All right? Nobody can be cheated again. Everybody now understands market direction and they are now following it. Is that okay? I've taken the time you're supposed to use to ask questions. I've used it to talk again. I feel not like ending it, but let's end it here. Any question? 1 minute, 1 minute to go. Because I do not pay for Zoom again. 1 minute to go, any question? Or you want me to give you a link to ask your question and end this session right now? If somebody else want to ask question that you want me to come back in 10 minutes, to just answer your question in 10 minutes, 20 minutes, I can do that for you. Is that okay? Is that okay by us? Or we want to end it here? If no question, no need to come back. We'll end it for now. Hello, guys. Okay, nobody talks. Then I want to move.
Yes, sir.
All right.
Sir, I don't know if this thing is right though. I've been monitoring AUD
Okay.
with the forecast you gave on the YouTube,
Okay.
and with the little explanation diagrams, I was able to see something, but I don't know if I'm right or wrong.
Something like what? What did you see?
You said that if
Sorry,
you
sorry.
said if,
Sorry, Mrs. Abiola. If this thing cut off, I will send another link so that
okay,
whoever
sir.
can come back to ask questions.
All right, sir.
So
Okay,
continue.
sir. Yeah, in the forecast you gave that if it was